Let's get more on this from her. She's right here with me. Jane Foley, Senior Foreign Exchange Strategist at Rabobank. So as we were saying there, we're seeing dollar at a 7-month high at the moment, and you're saying that that is pretty much set to continue.
It is, I think, at least in the near term, and this is all about the amount of gloom out there. Now, of course, we had the Fed yesterday stimulating, but we also had them warning about the outlook, and this just layers on the gloom that we've got on top of the Eurozone sovereign debt crisis. And it really is the fears about what could come out of that crisis that I think is driving the dollar. Its demand for liquidity is really pushing all the dollar's weak fundamentals back into second place, and demand for liquidity is really what it's all about right now, and that suggests that the dollar will be bid.
And one strategist that I spoke to said that actually you will see more demand for the dollar as the days and weeks and months go on, because of course it's as you say, its haven status will take precedent over some of the weaker, if you like, fundamental issues that are going on here. Do you agree with that? So we're going to see a continued rally in the near-term future?
I think that's entirely what we're going to see. And really, if we see worsening in the Eurozone crisis, which is entirely possible and perhaps probable, then it does seem that dollar demand will intensify. So perhaps, at least in a 3-month view, you could have euro extremely vulnerable against the US dollar. But I think it might change next year. If we do get some sort of solution for the Eurozone crisis, we could see that reverse really quite quickly.
Yes, that's quite a big if, I suppose, isn't it?
If, it is indeed.
Also, I suppose, many economists questioning the benefits of Operation Twist, saying that the Fed would have to go potentially one step further and implement QE3. How would that affect dollar-euro dynamics?
Well, again, I think the Eurozone situation, the fear is becoming far more obvious and far more pertinent, because generally speaking, when a central bank eases policy, it's currency negative. But right now, it's the fear, it's the need for liquidity that really is replacing all other fundamentals. So, yeah, it might have some incremental feeling or impact on the US dollar, but during this very tense period, the dollar is going to be favoured.
Okay, so you're saying that the big thing driving euro-dollar trade right now is a situation in the Eurozone, and we have seen the euro holding up pretty well. It has been fairly resilient, though recently we moved into a different range between 135, 140. What are the prospects? How low could we go then, let's say, by the end of the year? Well,
by the end of the year, I mean, you know, to be honest, my forecast is only 136, and we've already really bypassed that, so I do think we are going to see lower. It could see 130. We certainly could see that. It really very much depends on the pace at which the politicians act. You can understand from Merkel's point of view how difficult it is for her to go to the German taxpayer and ask for more guarantees. But I think eventually that is going to have to be done in order to solve this crisis, or move towards solving this crisis. In the meantime, the more the politicians drag their heels, the greater the risk that the euro will fall.
And that seems to be the direction that we're going in. But nevertheless, we've also got another layer of uncertainty, if you like, for investors right now, is the next tranche of Greek aid. It's what we're expecting them to get, 8 billion euros in the next few weeks. So how, if they do get that money, and it does look like eventually they will, what does that mean for the euro? Temporary bounce?
Well, perhaps not even that. I think people will automatically realise that this is just a tiny sticking plaster in this whole crisis, and we're just going to move on to the next fear. Is that will Greece default next month or the month after that? Is it going to default in a messy way? Is this going to be ordered? Are the politicians going to allow an orderly default? So in a way, I don't really think that that's going to make an awful lot of difference.
Okay, so Jane, we have some pretty big challenges on both sides of the Atlantic then. I think it's safe to say, what is the best way to position yourself in the currency markets right now? How do you deal with this? What's the best play?
I think you've got to look for the safe havens, and I really wouldn't be wanting to short the dollar in this environment.
So what does that mean? You will see because we've seen a Swiss bank intervention, does that mean more money going into the yen, Nordic currencies?
Probably into the yen, because of the Swiss bank action, because of the threat of Japanese intervention. Then I think the dollar had become even more of a safe haven than perhaps it was justified before. So the dollar is probably going to do better out of that. Sterling, very, very weak fundamentals there, but maybe it might do better against the euro, not the dollar, over the next few months. But I think that the dollar is going to be the clear winner.
Thank you very much indeed for joining us again. Jane Foley, Senior Foreign Exchange Strategist at Rabobank.